You've seen it, right? You scroll online and Bitcoin is hitting some new crazy high. You've got influencers and rented Lambos promising digital freedom. And that one friend is probably texting you right now about some new coin that's going to be the next big thing. From the outside, it really looks like we're in the middle of a massive financial revolution. But what happens when you actually peek behind the curtain?
So let's break this down. On one side, you have all this incredible hype, these huge promises of a brand new world. But on the other side, the reality is, well, it's a system that's way more fragile than most people realize. It's less of a revolution and a lot more like a game of Jenga that's about to topple over.
And this quote right here, it just perfectly captures what we're talking about today. See, Bitcoin is supposed to be this solid, unshakable foundation for the entire crypto world. But what if it's not? What if that foundation is actually the wobbliest block at the very bottom of the tower? What if the whole thing is just a digital mirage that kind of shimmers in the distance but disappears the second you try to rely on it?
Okay, let's start with the most basic claim of all. When Bitcoin first appeared back in 2008, it was called a peer-to-peer electronic cash system. The whole point was for it to be, money. So let's put that to the test. Let's see how it stacks up against the actual economic definition of what money is.
For anything to be called money, it has to do three key things. It's pretty simple, really. It has to work as a medium of exchange, to actually buy stuff. It needs to be a reliable store of value, so you can save it. And it has to be a stable unit of account, so we can price things with it. Well, spoiler alert, Bitcoin kind of fails on all three counts.
First up, as a medium of exchange, just look at these numbers. The Bitcoin network can handle about 500,000 transactions a day. And that might sound like a lot, but for comparison, the Visa network processes that same number in about 8 seconds. It's not even in the same league. The difference in scale is just insane.
And it's not just slow, it's incredibly inefficient. I mean, get this, a single Bitcoin transaction uses the same amount of electricity that an average American home uses in 43 days. The source material we're looking at has this perfect analogy for it. It's like trying to mow your lawn with a pair of nail scissors. It's just not a serious tool for the job.
Okay, fine. So it's not great for buying coffee. But what about that whole store of value argument? Is it digital gold? Not really. I mean, come on. Any asset that can lose 20% of its value in a single month isn't a safe place to park your money. It's a speculative gamble. It's not an investment. It's a casino ticket.
But you might be thinking, okay, this is all just theory, and that's fair. So what happens when Bitcoin is actually put to the test in the real world? Well, lucky for us, we have the perfect case study. Back in 2021, the entire nation of El Salvador made Bitcoin legal tender, and in doing so, they kicked off a huge nationwide experiment.
And the government went all in on this. To get things started, they offered every single citizen a $30 bonus just for downloading the official crypto wallet, which was called Chivo. The initial excitement was huge, but the results were definitely not what anyone was hoping for.
And this slide, this really gets to the heart of it. The data shows that a whopping 60% of the people who downloaded the app only did it to get their free $30. As soon as the bonus was gone, they ditched the wallet and never touched it again. So the adoption wasn't driven by any real use. It was just a one-time government handout.
And today, the aftermath is pretty clear. A staggering 77% of Salvadorans think the government should stop spending public money on Bitcoin. And what about international money transfers, one of the key things Bitcoin was supposed to fix? Well, 98% of them still go through the old-school banking system. Turns out, when you give people a choice, they just prefer the system that actually works.
So this all leads us to the central puzzle, right? If Bitcoin fails as money and it's not really being used in the real world, then why is it worth hundreds of billions of dollars? Where is all that value actually coming from?
The answer, it turns out, lies in a classic economic idea that's been used to explain speculative bubbles for centuries. It's called the greater fool theory. The theory is actually really simple. You can make money buying something that's totally overpriced as long as you can find someone else, a greater fool, who's willing to buy it from you for even more. The price has nothing to do with what the thing is actually worth. It's all about finding the next person in line. Think about it. Bitcoin doesn't generate profits like a company's stock, and it doesn't produce anything tangible like a commodity. Its value is 100% dependent on a constant stream of new buyers who are willing to pay more than the last group did. The second that stream of greater fools dries up, the whole Jenga tower comes crashing down. Okay,
But what about the big one, the core promise of Bitcoin? Decentralization. This idea that it's a financial democracy, totally free from the control of any powerful elites? Well, the data tells a very, very different story.
This statistic is it's wild. A tiny 2% of Bitcoin addresses control 95% of all the Bitcoin out there. Just let that sink in for a second. The wealth is more concentrated than in pretty much any traditional economy on the entire planet. So this isn't a democracy, it's an oligarchy. The market is controlled by a tiny handful of massive holders. People call them whales, and they can move the price whenever they feel like it. It's the exact definition of a centralized system. It's just got a fancy digital wrapper on it.
So, when you put it all together, when you look at its failure as money, the disaster of the El Salvador experiment, its total reliance on new buyers, and the absolute myth of decentralization, a really clear picture starts to emerge.
Bitcoin is the foundation of this whole crypto industry, but it's a foundation that's built on sand. It's held up by illusions, by hype, and by this collective hope that the music will never stop playing and that there will always be someone new to buy in. It's a digital mirage. It looks amazing from a distance, but it vanishes the moment you try to lean on it. And that leaves us with the ultimate question from our source material. Are we really building a revolutionary new financial system here? Or are we all just playing the world's biggest game of musical chairs, just waiting for the supply of greater fools to finally run out?